Welcome to the show of your dreams. I'm here with Gio.
Hello.
Gio's here. We're all here. It's a big day.
Can we show the card?
Show them the card. There, look, show them that. Look at that. There's that.
Card.
A homemade card. We welcome
Guys,
you in.
I don't know who the winner is.
We welcome you in from all over the world. I would start with this. Folks, we appreciate your support. All the patrons, this day is for you. You've brought us to this day, a lonely show of Paul and I and Tim in an empty room talking about finances. I'm so nervous I can hardly speak, but I would say this, Tim, and give me a good close-up on me. This man to my left has brought a lot of positive energy into my life, and he's really changed my entire family for the future. And it's very hard to gift this person anything because he can buy anything he wants. In fact, I gave him a book a couple days ago and he already bought it. So from all of our subscribers out there and all the people watching, all of our patrons, Tim, I'd like to wish Paul a happy 40th birthday.
Not today.
Which is coming next Tuesday.
Monday.
And you'll be very surprised to learn.
Next Monday.
That the girls are here with a cake
look
for you.
How cute this is.
My wife is here with the cake.
Oh my Lord.
Look at this reaction.
That's adorable.
It's a dog cake. We got the balloons.
Thank you so much. Can I take a picture of this?
He's got, Beth, you got to show this to camera. We got the balloons. Nicole, Gio, come this way. Oh, yeah, go around there. Yeah, you're fine. Don't block those cameras. There you go. There you go.
Oh, crap.
Look at that. Look at the happy birthday to Paul. He's 40. We got him, his most favorite thing in the world is his dogs on a couch. And Bethy, lift that cake up and show it right there. Gio, get out of the way real quick. Look, right there, Beth. That's fine. Just stop right there, babe. Back up a bit toward Paul. Yep, right there. There it is.
This is incredible.
Tim, cut to that cake a little bit. You can see.
Just a little bit.
Yeah, there's the cake.
Right there.
No wonder you weren't answering the text that I sent you. I was like, this isn't like Beth.
I don't want to respond. He'll know I'm here.
So blow those candles out.
Was this Michelangelo's?
Look at that.
Yes.
The Paul's dogs, and it's an incredible cake. And Gio, you can go.
This is adorable.
Yep,
it's not till Monday, but I'm glad they did it now because we're not going to have a live stream.
Yep, because we couldn't do this. We couldn't really do this.
I don't even want to eat this cake. Are we really eating this cake?
Look at that thing.
This cake is
that is the most
but it's a piece of
Here,
work.
Beth,
Oh, is that why you asked me what my favorite cake was?
Let me see. Let me hold the cake back. I'm sorry to delay the show, guys, but
It's very heavy.
we put this all together, guys. Beth, you can sit down. Gio, get out of the way. Go sit down. This is Bethy. Get out of the way. Get out of the way. You're right.
Oh, this is awesome.
This is the dog cake. So these are the 4 dogs, everybody. This is Howard is in the middle, Lucy, Sophie, and Oliver, and the couch. This is Paul's couch.
There's no way we can eat this cake.
It's a work of art.
It is absolutely incredible.
It's incredible. It's got the Michigan pillow. So here you go, Paul. Happy 40th.
This is the coolest cake ever.
This is literally the best cake I've ever seen in my life.
So here you go, Paul. It's gonna.
What if I drop this?
Yeah, just.
Oh my Lord! Look at Soph over there.
Just dive right into that. So
these are adorable.
Guys. The comments are going bonkers.
This is incredible.
And I'm sorry to derail the show, but
how long ago did you plan this?
Oh, months. Mo helped. Everyone helped.
You guys all helped?
Yeah, we all helped. So
thank you for not telling me there's a surprise coming, because that would have made me really mad.
Yeah, I know. I know you.
Now you do. Thank you very much.
Okay, everyone. So that's that.
Thanks, Bethy.
Oh,
Likewise, sort of. Good job, Beth.
Okay. Now let's bring it back home. Paul is now. We're getting to the Tesla. It's happening. Paul's going to go into that. But first, Paul, a major announcement for the dear patrons who've been giving themselves their hard-earned dollars, investing in themselves to get in our beautiful software. And we're going to announce now, Paul, some massive thing that we speculated and we're now delivering on. Go ahead, my dear friend Paul.
Guys, in typical fashion by Crossroads, we are making a release significantly earlier than I expected. The stock analyzer tool is ready. It was supposed to be ready end of August. We have great developers. We put extra people on it. We worked our butts off. The developers worked their butts off. Tim worked his butt off. We have the stock analyzer tool coming live here by the end of the show. This thing is awesome. It's going to give you 6 different values based on earnings, free cash flow, a low, middle, high. It has a video kind of explaining it. It's our intro. Guys, there will be bugs. Please report them. There will be issues. We're going to change the video as time goes on to address the confusion that people have. If you have any confusion, let us know. Remember, this is our first release to the masses, so it'll be available here shortly. Happy birthday to you guys.
I mean, we've gotten to the point where the comments are coming through. Everyone's
Jeez,
very
oh, Pete.
pleased. That is our announcement for the software. It's Paul's birthday. We got an announcement for the software. And Paul, should we delay or get right to it? What do you think? I mean, we have so many folks in ready to rock and roll. We've been waiting so many months for this, Paul. Your thoughts?
Are we just going to do this now?
I think so.
It's 1:05. We were trying to wait as long as possible. There's 675 people watching.
Describe
So guys, let me explain what happened here.
Please do.
Let's do one video and do it right after that. Let's analyze one stock.
We'll show the stock analyzer tool.
Yeah, let's show it.
All right.
Okay.
All right.
Now
Sim
you're
wants us to do
teasing.
that.
Now he's teasing me. Okay, here we go.
All right.
So, for example, we can do one of your faves, Paul, if you'd like. Oh, you're going to log in. We're going to go through this. Meanwhile, while Paul does it, let me
It's
update
easy
you.
for me to log in. Done.
Mo is here. Mo, you will be
Yes.
going live tomorrow morning at 9 a.m.
That's not true.
Sorry about that. Mo and Paul are going to Turks and Caicos this week to look at the new house they just bought down there, a gorgeous house. We will document everything for you patrons, don't worry. And of course, as a patron, you get a discount to our vacation homes.
Yes, you do.
So you can get in on that action.
And you should use a discount on this one because this is going to be a $16,000 to $20,000 a week house.
And your discount range is 5, 10, 15%,
Yeah.
depending on what tier you're in.
And
So
we will honor that as well. So
Yep.
if you're in even the top tier, paying $250 a month, one time buying a week pays the entire year of your Patreon.
And then on Thursday morning at 9 a.m., for all of the patrons only, an exclusive live patron event, I will be taking over the morning show at 9 a.m. And when the bell hits at 9:30, we will be buying, I personally will be buying 350 grand in stocks with the little book that beats the market. I will be giving this signed book away, not by the author, by these three schmucks on this show, a signed book that in the patrons, you've been commenting like bonkers and lighting up our phones for the past 24 hours. So keep commenting. I will give this book away, and we have more giveaways in the future. So I will give this book away live tomorrow. I'm sorry, Thursday at 9 a.m. Eastern. I'll be buying my Little Book stocks. So if you want to get on July 1st, if you want to get on the Little Book train with me, let's get after it, and we can get that cheddar. Okay, and Paul, do you want to show off the stock analyzer real quick?
Yeah, well, let's do a stock, and then we'll use the stock analyzer tool with it.
yeah, let's pick one.
Okay, let's see.
Disney?
I love Disney. Let's
Disney it
look
is.
at Disney before Tesla will
Susie
be
was very
coming-
nice and gave 10 pounds because of my birthday.
Very nice. That's right. After the Tesla giveaway, we are accepting $50 donations, and we give our donations to a local charity or a national charity. And if you want a particular stock, we'll be taking those later in the show after we give away the Tesla. This is stressful. I know. I agree, Christopher. All right, Paul. Let's look at Disney.
So what I want to talk about with Disney first, I'm not going to look at Disney's last year because revenue fell a ton. I just don't want to look at it. It's going to be misleading. This is part of value investing that I sit there and say, last year was an aberration. I don't even want to consider it. I'm going to immediately focus on the year before and before, okay? So the 8 pillars here on Disney are going to be inaccurate. If you see right here, it shows all X's in one check. It's not inaccurate, it's absolutely accurate, but I don't think it's a fair representation of Disney as a company. So let's go look at the metrics right now. $316 billion market cap. One thing I do want to mention though, it does kind of concern me that it's pretty close to its all-time high of 195 or so. That's kind of concerning, but either way, net income is negative, but let's look at the previous years. So income statement, let's go over here. So we're gonna go 54.8 to 78.27. So that's a check mark here. And again, this is a different form of what we're doing in terms of because look at the revenue fell over here. Now, net income. Net income was 9.12 to 5.38. That's an X there. So it did fall. I don't know why that fell. That's kind of interesting. It went 9.24. That must include, that includes part of COVID. That's why. Mm-hmm. Yeah, so it's still included, the part of COVID is still included in there. Shares outstanding. Now with shares outstanding, guys, I do want to look at this year's shares outstanding because I do want to factor that in when we're looking at the overall company because those shares are reality.
This is pillar number 5. Are they sharing or buying?
They are selling shares out.
Boy.
Yeah, so I do want to, that's an X there. Okay. But over the last 10 years, yeah, they did a big jump. Okay, that's not terrible, but it's a concern. Balance sheet. $32.9 billion versus 26.6, check mark there. Cash flow statement, again, go to the previous year's cash flow. I'm gonna completely scratch this out. We've got 7.68 to 347 million, that's an X. Probably because of COVID, again, because of COVID, so it kind of sucks. But the good thing is, if you look at the last 10 years, 3.6, 4.9, 6.8, 6.9, 7.7, 7.7, 10.7. So they're very consistently generating a lot of cash flow, right? Now, what's the big thing with Disney nowadays?
Oh, Disney Plus, Paul. Sorry about that.
And their subscriptions have been through the nose insane.
Yes.
I think they're at 100 million
100 million,
subscriptions.
yes.
Don't you know, Mo, how much, like, what's the average? Because they're giving away free months to get people into this, right? Or are they not?
Into what?
Disney
Disney
Plus.
Plus.
Oh, yes. They were, I don't know what they're doing now, but they were giving away Disney Plus to, if you were a Verizon Wireless customer, they just gave you a month free, or a year free, I'm sorry. That was initially. So I'm not sure what they're doing now, but their subscription are skyrocketing.
So this is something you have to factor in when it comes to revenue shift. Like this revenue shift hopefully will provide a lot of bump for them. So their average revenue of the last, about there because of this, probably about $6 billion a year. More than that. About $6 billion a year.
And talking about their revenue, that was, I mean, we know that 40% of their revenue was from theme parks and cruises and stuff that was completely shut down. And in some regards still is shut down in parts of the country and world.
Some of our patrons are saying the stock analyzer tool is live for them, so congratulations, everyone.
Already live.
Great.
Awesome.
Go ahead,
Awesome.
Paul.
So 6 billion times 20 is 120 billion. Now here's one thing I want you guys to remember to show a little bit about Disney. Their best year in profit in the last 10 years was profit of 13.5 billion. Okay? So, what's the current market cap of Disney? 316.
Yeah, boy.
316 divided by their best year of 13.5 is 25. What is that?
I got you. 316 divided by 13.5 is 23.4. Oh, you messed up, Paul.
I did.
You dummy.
So 23. That's still a little, and I'm going off their best year ever. So it already tells me maybe it's a little expensive. So we have to go to stock analyzer tool. Let's actually put it in there. Put it in your, wait, what?
Okay.
Take it easy there, Paul. I mean,
Oh, there's stock analyzer tool. We love it.
here we go.
Disney company. Okay. So here's how stock analyzer tool works. We're giving you the 1, 5, and 10-year annualized return for these annualized changes, profit margins and average, free cash flows percent of revenue, average, PE's current, that should actually say NA because it's a negative, but price to free cash flow of 237. So obviously, guys, I look at the 5 and 10-year here more. So taking out last year's drop in revenue, this was probably more like 2.5%, 3%. This is more like 5%. So on the low end, I would sit there and say 2, 4, and 6% growth. Now, one thing to remember, share change and desired annual return. You want to go from, here we're going from low to high, you want to go from high to low in these two. Why? Because you're being more conservative when you put a higher number early on for these. Because your desired return, if you want a high return, you're going to have to pay a lower price. So that's why we want to put high numbers here. And for all the rest, you want to assume lower numbers. You'll see that in the video here. It'll explain it all. So for share change, they were selling, okay. So for share change, I would go with, 2%. Let's go 1.5. And again, guys, these are all assumptions. All of these are assumptions that we are making. Okay, profit margin, I'm going to ignore all of last year. I'm going to call it 11, 12, and 13%. Free cash flow, 9, 10, 11%. PE. So what's the PE you want for...
A very large company that cannot grow like a... What do you think, Paul?
I'm calling 15, 17, and 19. Like, it's a very big company. It's going to be hard for them to really grow leaps and bounds. If you don't agree with me, I mean, look at their revenue growth numbers. We're not in the highest level. I'm assuming 6% revenue growth. That's not a ton, guys.
Yeah.
And so I look at it going, again, these are all the assumptions I'm putting in. Desired return. If I want to be a value investor, 15, regular, boom. You hit analyze.
This is where the money meets
number of
the-
years. Shoot, I think it's going to make me do it all
7
over
years.
again.
There you go, Paul.
There you go. Guys, now here's the point. It's currently at 174 bucks. The range is 35 to 89. 29 to 89. To me, this just says, this screams it's overpriced. Because look at it this way, guys. Let's assume I change my revenue assumptions. Let's assume my revenue assumptions are 5, 7, and 9%. Huge difference. Still has it as overpriced. This is why the stock analyzer tool is useful. It will show you how ridiculously overpriced Disney is. I just changed these numbers from 2, 4, and 6 or whatever to 5, 7, and 9. For the price to make sense currently in the middle section, let's say, look what we need to change our revenue assumption numbers to. Let me try 10, 13, 16. Still overpriced. You see what I mean here? This is what's big on value investing. These assumptions are getting higher. Revenue growth, everybody always says, oh, revenue growth's everything. Revenue growth. Look at how much I have to change revenue growth by. I'm still not at the current price where the stock is at. Still not there. So I just look at Disney and say it's overpriced, and my gut is that I've always said around $80 a share for Disney.
Yeah, it was always 75, 80, 85.
I mean, this is the high side, even though, Mo. Yeah. And I think the biggest issue here is the share change. I was surprised they're issuing more shares. It's probably somewhere in the 50 to 70 range. Probably somewhere in this range is my guess. Now, again, it's all about assumptions, what assumptions you make, the things like that. But I look at it saying, it's just numbers, guys. Change all the assumptions you want. You're still going to see, I can make Disney worth every bit of
$175.
Ready?
$200 a share if you want.
0, 0, 0. And then let's go to PE of, I'll do it Meet Kevin style.
70 PE.
What are you laughing about?
Meet Kevin.
There you go. It's a $200 stock.
There we go.
Buy all day.
I'm buying.
17,000 on the high side. Look at that, guys. If we get 100% revenue growth a year, it's a $17,000 stock. That's the point of the stock analyzer tool. It's not just to tell you buy the stock. It's also to tell you what would need to happen for the stock to be worth what it's at today. And hopefully you'll look at it and go, wait, this doesn't make any sense. It's not going to do that. So
in the stock analyzer, will you make it possible that I assume a certain growth for a specific value, i.e. last year COVID was crazy. I want to just assume certain growth from 2009 value to 2020.
One of the iterations about in the future is X number of years, a big growth, and then stabilize after that. So that is a very valid question and a great question, but we will allow you to do like a 20-year analysis and then split up the revenue growth, because that should be reasonable. As the company grows more and more, the revenue growth should decrease over time.
That's our take on Disney. That's the stock analyzer tool. We promised it end of July. It is not even end of June. And there you go, patrons. Again, Paul, I go on other YouTube pages sometimes to look at folks and they say, you know what, I'm not selling anything. It's like, you know what, guys, this is incredibly, incredibly difficult. And if you're a patron, you've seen the updates. We've shown you the hundreds of $1,000 bills that Uncle Paul has written to get all this for you. And so we are giving at pretty much the same price as all the other YouTubers. So, yeah, we're glad you're on our team, and we welcome your support. All right, Paul, enough BS. I can't take it anymore. Tim, look at that, Tim.
Okay, I need to explain.
Go for it.
The whole idea of what happened here. Guys, so here's how we did this. We had over 12,000 entries, including one postcard.
That's right.
We had one person send in a postcard for an entry into this giveaway. Mm-hmm. Okay. We had over 12,000 entries. So what does that mean? We picked 20 names initially. 20 names initially.
We randomized the list.
That's what I mean. We randomized the list. It gave us 20 names. And by the way, there were no repeats. That's how big this drawing was. 20 names. And then from there, we invited all 20 people
via email to today.
And some text when they were responding.
Will you get that screen off behind you so it's not a for the big announcement. We got the inception behind you. All right, here we go.
So then we announced it, and 20 people are on the live stream, hopefully today, that qualify. You don't have to be on the live stream in order to win, but we wanted you on the live stream. So here's our plan. I don't know who won. I'm going to open this envelope. I will not announce it yet. Then Seth will call the person. So if you were one of the 20 finalists, have your phone in front of you.
I'm freaking out.
I know, it's going to be awesome. And then when you answer, I will say, this is Paul from Everything Money. I will congratulate your name live, and you will know. So
put your headphones on before you do this.
Oh
my gosh. Okay, this is it. Oh my god.
Wait a second. I want to listen to this.
Well, Mo, you gotta.
Turning my mic
we can't at the moment. You can't hear. You can't hear him, Mo. You won't be able to.
I just want to go next to him.
Oh, okay. Go next to Paul. Paul.
Okay, so you know the person's number, right?
Well, I wrote the card, but I have it here. So.
That's what I mean. You know the person's number, right?
Yeah. So, you ready?
Yeah. Go ahead.
Okay, we're gonna call this person.
And they can hear me, right?
They should be able to hear you. Yes.
Okay.
You ready?
Let's do it.
I hope this works, Paul. Let's see. Can you hear it, Paul?
Yeah.
It's ringing.
I'm like,
It's ringing.
Someone picked up.
Hello?
Hi, is this Phil Sue from Evans, Georgia?
Yes, it is.
Phil, this is Paul from Everything Money. Congratulations, you won the Tesla.
Oh, wow.
How awesome is that?
Folks, this is Phil Sue from Evans, Georgia. I think he's in the bid and ask.
Are you in the bid and ask, Phil?
What is it? I'm sorry?
Are you in the bid and ask?
Bid and ask nation.
I am.
That's awesome. How do you feel, Phil?
I'm speechless, actually. It's awesome.
Phil, are you a Tesla fan? Are you ready to be one? Mo and I can help you put in the electrical charger in your garage. Are you taking the car, and what color do you want?
Or you can take the cash.
I'm not sure. Maybe blue.
There's a lot of pressure on him right now to answer these questions. Phil, congratulations. Thanks for being a good supporter. We appreciate it. Where is Evans, Georgia? Like, how far are you from Atlanta?
2.5 hours.
Oh, okay.
Phil, we're going to figure out a way to get us all together somehow. Us, you to us to you. We'll go pick out your car together at a Tesla dealership. We'll talk about colors, interior. We're going to make a whole show out of everybody. And Paul, show them there. There it is, Phil. Congratulations. Phil Sue is our Tesla Model 3, brand new Model 3 winner for our 50,000 subscriber. And we couldn't be happier. Tim and I worked the numbers and the drawing. And it was a tough process to get over 12,000 names in a randomizer to get your name, Phil, but we did it. We were nervous the whole time.
We got to keep this for him, too.
That's right. And so, folks, if you're out there, I see everyone congratulating Phil. I'm sorry that we couldn't give away more Teslas. Some channels give away a book bag.
We have another Tesla.
At 50,000
We have another
subscribers.
Tesla.
That's right, Tim. We are giving away a second Tesla at 100,000 subscribers, which should be around the Thanksgiving era of this year.
Probably sooner.
Probably sooner.
So, Phil, thanks so much. We'll be in touch with you. Thanks for making it on the show. I hope you skipped work for it because it was definitely worth it. And thanks for being a supporter.
Yeah, thanks for being one of our patrons. We love
Thank
you,
you.
man. Appreciate it. Talk to you later, Phil. Thanks,
Thank you so
man.
much, guys.
Yeah, great.
Bye.
Wow. Oh my gosh.
Hey,
Wow. So there you go, everyone. There were so many people in this world who are definitely huge fans of ours. We certainly wanted to give it to all of you, and we just had to choose one. And it's Phil Sue of Evans, Georgia, and obviously he's speechless, Paul. So wow. So anyway, that's our take. Wow, Paul, what do you think?
I think it's awesome. And I'm asking Sean's question. Sean said, I thought it was only patrons. Remember, every month you were a patron, you got a new
Extra
entry.
account, yes.
Yeah, so if you were a patron for 9 months, you had 9 entries. If you were a patron for 4 months, you had 4 entries. If you were a patron for 1 month, you had 1 entry. That's why there are 12,000 entries.
Yeah,
because
so like we have 3,600 now, so there's 36, and then last month we had 28, so there's add 28, we got to 5,000 all the way back to November.
So basically, the average person had about a little under 4 entries is what it was.
And so people who joined us back in the OG days, those $8 patrons, you guys got like 8 or 9 entries, and so that's how it went down, and that's how it'll go down again in this fall when we give away another Tesla. And I'm sure
Look at Derek go, Phil, we're best friends, right?
yeah, I'm sure Phil is freaking out.
Oh my God, our number of people watching fell by 200.
Oh wow, everyone just dumped out. Yeah.
Oh, you jerks.
Oh, everyone just left. All right, guys, I got you. Well,
that was great.
I guess James and everything. Okay, well, anyway, that is the story, folks. That is the Tesla giveaway. Tim, how is your heart beating over there? How are you feeling?
I was like pumping.
I'm fine, but it's so exciting. So awesome.
So awesome.
So awesome. Phil, congrats. You got a Tesla.
What in the hell were you thinking, Paul?
You remember this all started.
We're in Mexico.
Yeah. This all started in Mexico. We only had like 8,500 subscribers at the time, maybe 9,000. And we were talking about something. And I remember saying something to Seth about we were talking about numbers, all that stuff. I go, listen, I'm like, if it means giving away a Tesla or something, let's do it. And you're just like, wow. And I was like, let's just do it.
Actually, what it started out as is you said, let's give away a Tesla. Then it was Model S. And then you said, why don't we just give away
two
Model
Teslas.
3s?
Yeah, that's right. That's what it was.
It was going to be a Model S originally.
I mean, listen, I think this is wonderful. I think people have signed up for the software because of how good the software is. I don't think it's because of the Tesla giveaway, but it's really fun to do these things. We're going to do more stuff in the future. I mean, I just like doing that kind of crap, but it'll be all for the patrons, mostly for the patrons, except for the laws you have to abide by. So guys, still stay in this. It's still 100,000, and obviously the software is getting better and better every month. It's just, undeniable value at $24.80 a day.
Okay.
This is awesome.
Wow, there you go. That is.
How many times did you write this card? Did you have to rewrite it a couple times?
Beth was witness. It was one time, right, Beth?
One time?
It was one time.
Did you use Gio's handwriting coach?
Yeah, Gio just graduated from handwriting school. So.
Did you just?
Okay. Shall we get back to do what we do best, Paul, analyzing companies?
Yeah, you don't do that very well sometimes.
James Smith gave a donation of $50 to. Thanks, Paul. We'll send it out. James Smith gave a donation. He'd like to see JoAnn Fabrics. The ticker symbol is JoAnn, JOAN, JoAnn Fabrics.
Joan.
Pardon?
Joan.
Oh, this is brand new.
This isn't JoAnn
yeah, they
Fabrics.
just went public.
Yeah.
Beth, this isn't JoAnn Fabrics.
This is, but
Yeah,
the
it
ticker
is, but the
symbol
ticker
is
is
Joan.
Joan. What did I say? JoAnn?
Yeah.
I love you. Good Lord. Joan. The ticker symbol is JoAnn
16th.
Fabrics. And
There's not a lot of data on JoAnn Fabrics.
Yeah, they went public March 16th.
just recently.
Yeah.
We laughing about Seth.
Oh my God. So Nick just donated $5 and said, "Can you let Phil know I'm trying to reach him about his car's extended warranty?"
That is
Wow.
amazing.
These guys, Paul, you thought you needed a comedy writer.
That was
This one
good.
right here. This is really live. Yeah, and other people are urging us to just stay on this live chat till we hit 100K.
That'd be hard, but I could do it.
Yeah, it could be done.
This Phil guy's a poser, is that what it says? Phil's great. He's very nice.
All right, Phil, you're already getting the hate mail already. There you go, brother.
You know what? Do me a favor. I'll go over this quickly. Give him another stock to pick because there's not enough data on this company.
Okay.
There's only 3/4 of data. I mean, one thing I'll say is market cap is very low for how much revenue they have.
Okay.
Very, very low. This is like car company kind of price to sales ratio. I mean, there's no free cash flow in the last 12 months. I mean, there's really nothing to look at here, guys. Gross profit's high, 50%, which is awesome.
Oh, we can look over here.
What are we looking at? Oh, the chart?
Yeah, day trading chart. So actually,
yeah.
Go ahead and do your thing, Paul.
This is just a tough one in general.
Yeah, I mean, folks, if with IPOs, one of our patrons coined it's probably overpriced. We tend to, and not just we, Paul. It's not a radical thing. I'm reading that book.
But this doesn't seem to, this isn't from the price to sales ratio. And guys,
Okay.
I'm not saying everything should be based on price to sales, but this is low for retail. This is very, very low for retail. They have, I mean, as an example, well, maybe not. Maybe it's not. Let me see what Walmart is. Maybe it's not actually. Come to think of it. Yeah. Well, I mean, look at Walmart's at 0.7. Oh, but they're also at a PE of 31. So still, I mean, it seems maybe reasonable. I don't know, but right now we have JoAnn Fabrics as a company that is new, doesn't have much data. I'm sure they have more data on their website that we don't get in our part of our data feed. But understand, JoAnn Fabrics has been around forever. I mean, isn't it local?
Yeah.
Hudson, Ohio. Yes.
Yeah, it's based here. Yeah, so I don't know. I just it's not enough data for me to go and get some analysis going and say, hey, look at this, look at that. It's a hard thing to do. Like I don't have a profit margin. I don't have anything to look at. I mean, we can look at the quarterly numbers, but it's retail. Quarters.
Scotty's saying check out their debt. Actually, maybe there's
what's
something to see there.
What's their debt like? A lot. Well, they probably have a lot having to do with capital lease obligation for leases for stores. That's probably the big issue. So one thing I'll say about the store debt, guys, this is a lot, but you can sublease this stuff. That doesn't mean the full thing can go to zero. No, they'll probably have to take a hit. So maybe, and this is part of a deeper dive into security analysis, is when you start looking at assets and liabilities. In real security analysis, you should count all liabilities in total, never discount. But at the same time, if you want to be thorough, it's a good way of being a good value investor. But if you want to be a regular investor, you might sit there and say, well, they might be able to sublease, and instead of being $1.5 billion in debt, it's actually $1 billion in debt. I don't know. I would always recommend being the worst case on the debt. It's a full debt value, but who knows?
Mower, is anyone trading JoAnn over there?
So you guys know I don't like to trade IPOs, especially this one is just over 50 days old or something like that. So this is a 15-minute chart. So basically, each one of these candles is a 15-minute ticker. So I'm taking a daily chart, daily candlestick, and just opening it up and looking inside of it. But I'm just looking at this generally. It has some big, moves. I'll just point going throughout the day. This is a big run yesterday. This is a big run today. So this thing does have some price action to it. So this is something that you day traders will definitely want to look at. This is what these IPOs are good for. You can go in, catch the little bit of volatility, a little bit of hype that comes with them. That's where you can capitalize on them. So with these IPOs, go and day trade them. This is perfect.
James says instead of that one, since he did donate 50, Paul, can we quickly pull up Best Buy?
I love Best
And
Buy.
while Paul pulls that up, I'll preface this, folks. Moving forward, We have an incredible amount of content coming out this week and next. We're doing a video on Amazon versus Alibaba after a lot of requests. We have Intel, AMD, and Micron, a comparison of all three companies. We're looking at Fox A company that both Paul and I own. Moderna versus Pfizer. We're looking at Nike versus Under Armour, folks. We did a show on how I've been wrong about Paul, thinking about Paul and his approach for the past couple years, and I sort of apologized to Paul. We're doing Colgate Palmolive. There's a little book update from me. Tons of content coming from Everything
Dave
Money.
Ramsey.
And a Dave Ramsey
Yeah.
video. Good Lord, hold your shorts on there. Dave Ramsey follow-up for us as well. And with that said, Paul, shall we give away...
First off, I'm mesmerized by this cake. I mean, I legitimately do not want to eat it.
It's the best.
Shout out to the cake lady.
Listen,
It's like
It's Michelangelo's, I said.
no.
If
I
you're-
asked you, and you said,
Any way you ice it.
any way you ice it. I mean, this cake is absolutely unbelievable. This is absolutely unbelievable. I
Don't
do
drop
not
it.
want to eat this cake.
so if you're coming in late, it was Paul's birthday.
It is
Paul's
my birthday on Monday. This upcoming Monday is my birthday, July 5th.
And Beth said,
Venmo me money.
so we had this idea. Mo and I were going to get together with Beth and get you a cake. Now, Paul, I'm a cake specialist, you know. Beth and I have photographed about 220 weddings.
True, that's true.
So we see the best of the best
This is incredible.
of cake. So Beth says she's going to go down to lonely Clinton, Ohio, and get some cake later. I'm thinking, if they screw this up, I know you. You'll just be like, these don't look like my dogs. But sure enough,
Those look exactly like my
this is your
dogs.
couch, your Michigan, your blanket, and the 4 dogs rolling around. This
So
is
everybody
incredible.
should know,
Is the best.
Tim, everybody should know. Wait, Nate's out today, by the way. Everyone should know that what I do when I'm alone, my free time, I lay on my couch with a Michigan blanket, Michigan stuff. I wear Michigan gear, and my dogs lay around me, and that's what I do for this is why this is such a perfect gift. Like literally, I ordered the exact same couch for my new house as I have in my old house because I loved how it felt. I just laid there. It was perfect for me, and it's a little, simple, but I love it, and the dogs are great, and they're probably wreaking havoc on the people at the house right now.
Shall we get into Best Buy, Paul?
Yeah, Best Buy is great. By the way, look at an example. Best Buy's price to sales ratio is 0.58 with a PE of 13. So that's what I'm sitting there saying. We don't have a lot of data. It's nice to look at other things to say, wait, is this overpriced? Is it not? I don't know. Profit margin of 4.5%. Is that higher than
Target.
Michael's? Not Michael's. JOANN Fabrics. I don't know if that's what I'm sitting there saying is to get an idea on JOANN Fabrics, you can look at other retailers and kind of compare things, right? Because if their profit margin was 10%, I would say, yeah, you can't really compare these two price to sales, et cetera. So anyhow, all right, so let's go look at it.
Keep going. Yep. We have a couple more donations after this one, Paul. So
29 billion, PE of 13, profit margin of 4.4, dividend of 2%, pays $600 million a year. Last year's free cash flow was 3.5, so they can easily cover that dividend, guys, because remember, dividends are not always secure, and a very high return on assets and return on invested capital. They deploy their capital. They use their capital very well to make money. So far, one check and one X, but with other things that look pretty good. You know what I'm saying?
Profit growth. You ready to do pillar number 3? Revenue growth. Revenue growth.
So now I'm going to go to 4 quarters. 39.5 billion to 50 billion. That's a check mark there. Obviously, I don't know why COVID. I mean, people are always staying at home and doing a lot of stuff at home, so they're buying a lot of crap. But look at Best Buy. They did a big turnaround from years past. In 2012, they did 45 billion, got all the way down to 39.4, and then they did a big turn. I remember this was going down. There was a big turnaround. The founder got involved, but they did a great job turning themselves around. In fact, I love Amazon, but when I go buy electronics, I really like going to Best Buy for the help and all that stuff.
I agree with you.
Profit from 1.19 to 2.23, check mark there. And shares outstanding, 309 down to 253, consistently buying shares back. Muy bueno.
Wow.
And I like that,
Wow,
especially
that's
with a
good.
cheap company of 13 PE. So I like that a lot.
Okay, keep going. How about current assets over current liabilities? Pillar number 6.
11.27 versus 9.6, check mark there. And the price to free cash flow, 1.7 to 3.5, check mark with an average of 2. 2 times 20 equals 40 billion. And what was the market cap?
You have to give me a second. I'm not on it. I'm going to Everything Money Software. I was doing something else, Paul. We got donations flying in. The market cap is about 29 bill.
Check mark there. So it's selling for about 15 times
Ooh, not
free
bad.
cash flow with it. That's the average of the last 5 years, but you're seeing how big. Last year's free cash flow, it's selling for 9 times, not even, 8.5 times, 8.6. So it's selling for a very low multiple of free cash flow last year. So the question is this sustainable?
Kyle's saying Best Buy Marketplace makes it more like Amazon for online store. I haven't seen it.
No, listen.
Best Buy
is incredible
amazing.
for online
Everything.
pickup, curbside pickup. It's incredible.
I personally think they were the ones to like revolutionize the COVID curbside pickup. It's
Really?
phenomenal, just phenomenal.
I love Best Buy.
Yeah, they're great.
And it's funny thing, I go to Best Buy and it's pretty empty, and then you see these sales, you're like, okay.
Yeah.
So let's look at the 8 pillars here.
Yeah, please do.
The only X is profit margin, which, by the way, you guys know how I feel about that one. If this is the only X, I think you do deeper dive into it. I've liked Best Buy for a while. So let's put our stock analyzer tool.
If you're just joining us, this is the new stock analyzer tool you have as a patron. You get the software, you get the pillar software, and of course, this just released today. We announced it just as the show started. It's Paul's birthday, and he wanted to give. And so here is your new stock analyzer tool. Go ahead, Paul.
So this is a big year. I'm striking that out. I'm not even looking at that. I'm not even looking at the revenue growth because the revenue growth was driven by, and the same with profit margin. I'm going to discount that. Because revenue growth and profit margin were driven by COVID. So I'm going to base it on the 5 and 10 year average. So I'm going to go 1, 3, and 5%. I think 5% is high. 2.5 and 4. Share change. They buy shares back like crazy. So again, this one you want to go from higher to lower. So -2, -3, -4%. Profit margin. I think you stay at 2.25, 2.75, 3.25%. Free cash flow, 3.5, 3.5, 4, and 4.5. PE, 15, 12, 14, 16. Price of free cash flow, 12, 14, 16. Desired return. I like to stay at these levels. Hit analyze, and look at this. So we have 3 prices. So it kind of seems that maybe it's selling for where it should on a...
It's $115 right now.
Yeah, so there are 3 prices that are below, 3 prices above. Maybe it's selling for where it should be right now. I don't know if exactly what it is, but is it a value play now? I don't think it's a value play currently. But I'm making pretty good assumptions, I think, right here. It probably is worth somewhere in that 80 to 120 range. And that's a big range, but remember, guys, these big ranges do matter because Warren Buffett and Charlie Munger always talk about how if they both came up with the price for Berkshire, they came up with different prices. It's okay. And the stock analyzer tool needs to be used this kind of method. Like, okay, well, could this happen? Sure, this could happen. If you thought all this was going to happen, this is a buy all day long.
A Recon is saying that Best Buy is a little book stock at the $500 million cap. So actually, I will be buying Best Buy this Thursday, Paul, in my little book portfolio.
And why is it a little book stock? Return on assets are high, PE is low.
Yep, there you go. Mo, are people trading Best Buy right now?
So people do like to trade this. Now, I look at this chart and I go back to October of last year and I just draw a straight line across there and look at how much resistance is there. But at the same point, there's a lot of support right in this range too. So you got this range to play with up and down between, say, $110 and $120. Right now, you got to wait for this red line to move into the sweet spot. Once it does that, I think you'll be able to capitalize maybe $125 a share. But beyond that, you have this very heavy resistance that's been on top of you for, I don't know, multiple months. When was October? 8 months ago?
Yeah.
So 8 months of resistance that you can't break through. That's very tough to do. So if you're going to do this, maybe swing trade it, but just know that you're going to probably be taking profits in this $123 range.
So everybody knows, I forgot to mention the charity. People have asked. I'm big on supporting a few charities. I'm still doing Innocence Project. I still love the Innocence Project. I think they do great work for violent offenders who have been wrongly accused and helping them get out of prison, et cetera. So they've done a great job. Look at them. Again, to repeat about stock analyzer tool, I think from a value play, you're not buying Best Buy right here. But if you really believe it, I don't think these are bad assumptions, by the way. These assumptions are not crazy assumptions. I don't think 4% growth over the next 5, 6, 7 years is a bad assumption, especially with inflation coming in. I think the share change might be aggressive, but they've done that in the last 10 years. I just think this only PE though. I mean, that's the only. Even then, listen. I think if you buy Best Buy now, you're probably not going to be hurting. But if you're a value player and you want to buy it at a lower level, I think that's me.
This might be a good company to go out and sell some puts on.
Yes.
See if you can find some options on
I mean,
it.
it's going to pay you garbage yield, but at the
It
same
is.
point, if you're getting 3-4% yield on something,
True, but
that's fine.
if you want to do something with this and you go out 6 to 12 months, you might get some real premium with that.
Brother's asking, does the stock analyze tool take dividend returns into consideration, Paul?
So remember, dividend returns, it's kind of, the stock analyzer tool factors in your free cash flow. Free cash flow is then used to pay dividends. So if you add the dividends back in, you're basically double counting free cash flow. So it doesn't even include that. When you pay the dividends out, it would be double counting. Now there are going to be future stock analyzer tools that will factor in debt, but this is a very high level, just multiple back of the napkin. Let's see where we're at kind of thing. If you want a very, very in-depth version, I don't know if we're going to do that, but if we do it, it'll be in the future. I'm trying to be more of the everyday average man's analyzer of saying, hey, this stock is clearly overvalued, this stock is clearly undervalued, go do your due diligence from there. Messing with balance sheets and all that stuff, that should be part of your analysis along the way, is how does the balance sheet look? And then how are they paying dividends versus can they, et cetera. So this isn't, that return of 15, 12.5, and 10 does factor in dividends in there, because in a roundabout way, it's already being factored in there. Either you get the cash in your hand now, or it's held as free cash flow within the company. It's one of the two. It's coming in your pocket in some fashion.
We have Trapper donated $50 for our next stock. Donations go to the Innocence Project. Paul is very big on getting people who are innocent out of trouble in terms of financially and legally.
Yet I always accuse Seth of things that he has not done.
And it's got me in some hot water at home, Paul. Thank you for that. In fact, most of my family's here. So, yeah, okay, Paul. Let's get after RiteAid is the next stock.
Rad.
The ticker symbol is RAD, R-A-D. RiteAid is a corporation, is an American drugstore chain based in Camp Hill, Pennsylvania. It was founded in 1962 in Scranton. We know all about Scranton.
Look at this stock. Look at the stock price for RiteAid. They had reverse splits at one point. 1999, guys. If I told you RiteAid,
look at that. If
I told you in 1999 that the stock price equivalent to $9.91 was selling for $16 now, what would you say?
It went
Anybody
down.
want to guess that percentage drop?
It went down to $4 in 2009.
No, I bet you. I think it was a penny stock, and they did a reverse split.
Oh, wow.
Can anybody verify
Sorry
that?
about
Mo,
that.
can you verify that?
Yeah.
I think they did a reverse split years ago.
Okay.
And reversed it. This is a 99% drop, essentially, guys. If I told you, this is the whole point about euphoria. Would anybody believe that 23 years later, the stock would be 99% lower? What would they have said to me?
It looks like in 2019 they did do a 20-to-1 reverse split.
Yeah, and then in 91 they did 2 for 1, and 98 they did 2 for 1.
So they keep.
So they did 20 for 1. So this is
Then they did 1 for 20 in 2019.
correct. That's what I meant. 1 for 20. So in 1998 they were actually at $49 a share, and they went down to 75 cents a share, right? Whatever that number is, 80 cents a share. Guys, this happens. Would anybody believed it off of this chart right here that this company was going to fall 99%?
Crazy.
Well, it happened. And especially a company like RiteAid. Oh, RiteAid's not going out of business. They're everywhere.
They're on every corner.
Yeah. All right.
They used to be, right? Yeah.
Yeah, they
Market
used
cap.
to be.
Market cap, 860 million. Net income, negative. So no PE, no profit margin. Sick. Dividend, 0. Free cash flow, negative. Return on assets, negative. Return on invested capital, negative. Are we seeing a pattern here, kids?
It's pretty good.
Keep going.
Income statement. Well, at least we have growth in revenue. Not.
Oh boy.
See what I did there? 25 billion down to 24. However, it is rebounding over the last few years. So before I knock them, go find out these were acquisitions, because it's pretty easy to make acquisitions. Net income. Why are we looking at this company?
It was requested, Paul.
Oh yeah, you're right.
A wonderful donation.
Negative 66 million to a
Trapper.
negative 40 million. Big gain here. They probably sold something that the only good investment they had, they probably sold. So let's see.
Go look at Walgreens or CVS.
You know, I think the guy or gal who requested this Trapper, he is. Do you know him, Mo? He's a little frothy with his. He's requested in the past.
Really?
He likes to go after some stuff. This is
Yeah?
not the first time that he loves this stuff.
So this is an example. So there are some value investors who like turnaround plays. This would be an example of a turnaround play. Like a Carl Icahn would do something like this, where he'd go, let me go take this company over, turn it around. They have some good thing. Eddie Lampert, when he did that with Kmart. That's what this play, this is not the kind of investment I do. Their shares are increasing. That's an X. They don't have free cash flow. They hate money.
Cut to the 8 pillars, Paul. Let's cut the BS
If I
here.
wasn't 8, okay.
Okay, here we go. Yeah,
All right, revenue growth makes sense because they, Oh no, wait, revenue growth doesn't make sense. Bug. Uncle Tim, can you report this? Maybe I read it wrong.
Timothy.
Oh, I remember why.
So revenue. Oh, I see. Look at that.
I get what they did wrong. So it's still it should be an X based on how we do it. So I got to go in there and change the calculation on that. Assets and liabilities are fine. I mean, guys, there's nothing here. For me, as an investor, the kind of investment I like to do, I'm not into turnaround. I like turnaround plays for real estate, but not for businesses. To me, I'm not in control of the business. I don't want to mess with it. That's my opinion.
Mo, how's the trade? Oh, look at that trade.
Yeah, I mean, it's down. The good news is that you gap down back here, so that will likely fill at some point. And it's actually not terrible. I mean, you're in a downtrend right now. Don't go long on it. But maybe this is something that you throw as one of your dog stocks. Wait till this red line starts turning up. That gap is going to fill to the top side, and then you have a ton of resistance here at about $23 a share. So this is actually something to take a look at, and maybe you can squeeze some juice out of this one for sure.
And Kay made a point. Eddie Lampert ruined Kmart. Kmart did go under on Eddie Lampert, Sears and Kmart. Eddie Lampert made those plays because of the real estate. Eddie Lampert made a killing on Kmart and Sears, not because of the retail, because of the real estate attached to it. That's what it was. So maybe there's a play here for that, but I think RiteAid probably leases a lot of their locations. I have no idea. For me, it's just not making me feel warm and fuzzy inside.
That's our take on RiteAid. If you joined us late, it's Paul's birthday next week. Congratulations to Paul being 40. We gave away the Tesla on the early moments of the show. Congrats to Phil Sue. We called him. You guys can rewind back and see Phil Sue from the Bidnass Nation. Over 12,000 entries. All the patrons who's ever given us any money got in. And we ran a randomizer and got Phil. So there he is. Phil's getting a new Tesla, and it's going to be hilarious. We're going to go and either have him here or somehow get us down there and go pick out a car for him. So moving forward, folks, we are giving another Tesla away at 100,000. We appreciate all your support. As always, we're taking $50 donations to Hear a Stock. And Paul, I have two more for you. Kenneth Rassau. Now, this is an early patron, right, Tim?
Oh, he's one of our OGs.
He's one of our OGs.
He's in the Paul Super
in the Paul Super Shorts.
Really great guy.
I think he was like in the first 5.
Oh, wow. So
he's a really great guy.
Yeah, this is OG, and he wants to look at, I didn't look it up yet because I was just smiling and laughing. The ticker symbol is EXP, which is Eagle Materials Building Material, EXP. It's a producer of buildings based in Dallas, Texas. The company produces cement, concrete, construction, aggregate, gypsum, wallboard, paperboard, and sand for hydraulic fracturing, whatever that is. And they have 2,200 employees, founded in 1963. Paul, let's look at Eagle. You have a huge bald eagle chest tattoo, right, across your...
I do, with your face on it, though.
Yeah, I'm the eagle?
You're the eagle.
Oh,
by the way, update for those of you following me on Instagram.
Go on.
At Paul Gabriel. I had those birds that are living outside my... have you seen this, Bethany?
I love it.
My birds that are living outside my window in my bathroom. So when I sit in the can, I look out the window, and right to the right, there's these birds, and they were obviously eggs this morning. They're starting to try to flap around and all that stuff. So there'll be more updates on that one.
So if you want to follow along, a guy sitting in a $2 million mansion on the can watching birds, follow Paul Gabriel at Paul
Gabriel, Gabrail.
You can see all the financial news and notes coming from a guy sitting on the toilet.
It's all personal stuff. I rarely put anything business related, if anything at all. It's all personal stuff. The birds are so cute, though.
Let's look at Eagle Materials. Let's look at
Let's call it $6 billion company, PE of 17, and a nice healthy profit margin of 21. How do they have a profit margin of 21 and a gross margin of 25? They have very little overhead? Maybe they had some big gain on sale of something. So right here, guys, as I talk about the 8 pillars, I'm looking at this going, how can you have such a low gross margin with such a high profit margin? That's pretty weird. Oh, look.
Look at that adorable. Well, look at that dividend, not 0.7, 0.07.
Why bother?
They're just handing out
$4 million dividend on $589 million in free cash flow.
How many shares are there? They're literally handing you $2 a year. All right, let's keep going, guys. This is so cute. Okay, Eagle Materials, Paul.
Okay, whatever. Let's go to the next. Let's go to the income
revenue
statement.
growth is pillar number 3. Give it to me, baby.
1.2 to 1.62. Check mark there.
Okay.
This is big growth. Look at this, 3.5 times in the last 10 years. Yeah,
Okay.
that's
How
pretty big.
about profit growth over that time?
198 to 339. Check mark there.
Check, please.
Okay.
Check, please.
And
Whose idea was the cake? Like that actual design?
Beth,
Was it
I
Betty's?
think it was me and Beth. I don't know.
come tell the
was
story.
probably
Beth.
Beth's
Just
idea.
Come over here and talk to me real quick.
Let's finish the stock and then you'll tell us the story.
She's the most creative one.
48 million down to 41 million. Check mark there.
Okay. And yes, we will do a mansion walkthrough of Paul's new house for the patrons. Lake Stone, thanks for asking.
Yeah, but it's going to be a while. 661 in total current assets, cash on hand, versus 169. So they're plenty cash on hand to pay their bills.
Perfect.
Let's go to the free cash fizzle.
This is very important, Paul. In your
Okay, so look at this, 275 to 589, big jump. So obviously last year was very good for them. Average of 300. I mean, look at the last, yeah, maybe so. Okay.
Kenneth is saying concrete's the backbone of every nation. Century is saying EXP is the picks and shovels for
It's selling
construction.
for, by the way, it's
and
selling
oil
for about
exploration.
20. It's a check on the
Oh my gosh.
price of free cash flow. So let's go put it in the stock analyzer tool because let's look at revenue growth. EXP, your dynamite. 7, 9. I'm just going to skip ahead on some of these. Share change, 0.
What you doing over there? Oh, you're doing a stock analysis. Should we cut over to Mo and come back to
Yeah,
it, Paul?
do that. That'd be great.
Is anyone trading Mo, the EXP, Eagle Materials? What's going on over there?
So I've never heard of it, but look at this rip up since COVID.
Of course,
That's
right?
incredible. So let's see.
But
Let's
it's
zoom in
coming
and see what
back
we can do
home
now.
now here. Well,
It's
look at
calmed down.
this.
It's coming down a little bit, but I mean, look how much support is in there. I don't think it's going to drop very much unless something happens. But you're in a downtrend. For this one, not something I would go try to short just because it has so much support on it. I would probably wait until it starts making engulfing candlesticks. I don't know when that'll be, but breaking out to new all-time highs. See if you can get to create some kind of power stock. I'm sure it's over all of its major moving averages. Start making those new all-time highs again, and I think you'll be pretty happy.
We're
with this
waiting
one.
for a sweet spot reversal
Yeah,
here, but how would the volume be,
Oh, that's a
Mo,
good
on
question.
such a small company?
Question. Let's see
I'm
what
wondering.
the average volume is.
Look at Seth.
Look at me go,
This
Paul.
is 1 point. Okay, so good call, Seth. Average volume is definitely less than a million. It's about 500,000 shares traded per day. So my personal opinion is not to trade something that is that low, just because you can find that volatility if people go in and buy a lot of shares. But great point. I got nothing else to say. Good point. Don't do this one.
You're such a closer, Mo. You really bring it home at the end there, but
I think my thing is
love
not
you.
being able to close,
I
so
love
that's
you.
just my staple. So let's just let it go.
So no, yes. If you're wondering how some idiot like me knows, I've been the employed trader for the past 6 weeks now, and you can watch the employed trader series on our YouTube channel about how people like me with a couple jobs and a couple kids, a gorgeous wife, how I have time to trade stocks and understand charts. And so watch the Employed Trader series if you're interested in this. Paul, let's just look at what we should be paying for Eagle Materials, Paul.
Okay, so I put in some assumptions here that were probably conservative across the board, and I'm getting a price that it's basically saying it's over, but not by much. Like, I do think that it was a slight, and remember guys, when people say like, oh, this stock's not gonna fall a third, go look at any stock. What's his name? Joel Greenblatt in the little book that beats the market talks about this. Go look at a 52-week chart for any stock. You'll see massive fluctuations in the price. I think this is, I mean, if this is a good company, the concern I always have is construction is very booming right now. A guy like Warren Buffett would say, you buy a good company, don't worry about the cyclicality. Gary Mashura says the exact same thing. I think I worry about that way more than I should. But along the way, I don't think this is far off in terms of value, but I do think it's overvalued, which is pretty consistent with this market. But I think, somewhere over here, I don't think it's as far off as I thought it was going to be originally. Are these assumptions true? That's the question. Now look at these assumptions I did change. Like look at last year's profit margin of 20%. Remember I said it sounded really high? Well, typically it's 13%. So I just adjusted that lower. And I made 10, 12, and 14 my numbers. So that's when I said that. I mean, that was a big red flag to me. Like how is their profit margin so high on 25% gross margin? So dab for being observant.
All right, that's our take on Eagle Materials, an interesting company, a smaller company, but okay. We have a couple more donations, Paul. I would say our English patrons are very pleased. Paul, England beat Germany 2-0 in soccer just now, so we are going up against that.
Better than World War II.
Oh my Lord. Oh my.
That might have been the best joke ever. I don't even know how to react, but that was really good.
Oh my God. You know, folks, we talk about what can ever bring this show down, and I think it's
So
just gonna be Paul's mouth one day.
One day I'll just say something completely ridiculous, not intended to offend.
Live.
Yeah.
It'll be live, and the whole show will come crashing
So
down.
I watched the Bob Saget Comedy Central roast. Have you seen this?
Oh Lord.
I'm obsessed with the Comedy Central roast, and the Bob Saget one's great because Norm Macdonald, he just makes really terrible jokes, and there's like literally crickets, but it's so funny because of how bad the jokes are that it's just hilarious. Like literally, he's like, Bob Saget looks like a canary. You'd say he's for the birds or something like that. Everyone's just like, he goes, get it? For the birds. It's just like, this is terrible. And I'm losing it because I was just like, it's so bad.
I can see why you're drawn to that because that's how we feel when
Exactly.
you talk.
And by the way, I make the jokes for myself. I say the
see.
jokes. I can get the
course.
amusement of the crickets.
Of course.
Like I don't even want to look at the two ladies over here and how they're probably like, that wasn't funny.
Okay, let's get after the next
one.
stock. This is from, let's see. Uh-oh, Paul. I think it might be a read or something. The ticker symbol is ELVT. ELVT. This
Elevate?
is Elevate Credit.
We've talked about this one before, and I said this is banking, and I don't do banking. And the reason I don't do banking, guys, is look at their balance sheet.
Oh, Lord.
Their balance sheet. Oh, wait a second. This might be just an intermediary. Let's
you
figure
think?
that out. Hang on a
Okay.
second.
So if I go on my screen, I mean, it just says Elevate Credit International. It doesn't give
Online
much.
credit solutions. Company provide credit to non-prime. Yeah.
What do you think?
So the thing about this one, this is a financial company, and they're going to sit there and look. To me, it's like a bank. It is a bank. They're lending money. It's more than just the cash flow. The cash flow is totally different. If they're providing if they're like a Rocket Mortgage where they're like being an intermediary for mortgages, selling them off, keeping the profit, things like that, it'd be much easier. So I would prefer we do a different company than this because this is going to. I mean, look at the PE. Everybody's going to be intrigued by this PE, 3.4. Let's go look at their 8 pillars in general.
Yeah, Paul Matthews saying your World War II jokes are bombing. boy.
Oh, you laugh at that one, Beth?
And also, Paul, after the stock, we'd love an update on the Everything Money merchandise, Paul.
I know. I just had. By the way, we officially made the acquisition. Buying into. We are now partners in where I'm from, a great clothing provider here in Ohio, and they're growing nationally. They'll be the providers of all of our merch that are gear to wear. They came in yesterday. We signed the papers. We made the check happen. And so we're going to be working with them. I told them all about how.
Yeah, here they are. Keep talking about this. I'm on their website where I'm from. It's a Cleveland-based company, and they got the shirts.
Columbus-based.
Oh, Columbus. My apologies.
Yeah, they're based in Columbus.
They got
the guys are from Canton.
Okay.
They're good friends of Mikey's from when they were younger. Great guys.
These are going to be our merch provider, huh?
Yeah, they have very good quality clothing. So anyways, I talked to them about it. They're excited. I told them to go, guys, this is what I need you to do. I'm only going to sell lots of 100 or 200 of an item. I'll say, guys, whoever wants it, go to the website now, order it. It'll be a month. We're only going to build to order. It's going to be limited quantity, build to order, and shipped right to your door right from the factory. And if you're international though, it's going to be a lot for shipping. It's going to be like 25 or 30 bucks just for shipping. So we'll get you more specifics on that, but international will be very expensive.
Wow. Okay. So that was the last donation stock we had. It's 2:00, Paul. What are your thoughts?
Whatever your thoughts are. There's a big. Oh, should we do the cake? We should go upstairs and do the cake after this.
Yeah, we'll eat the cake together. Would you like to look at Peloton real quick?
Why do you pick the awful companies?
I want to see where they're at after all their. Remember all their non. Here they go. Look at this.
Oh, so now, by the way, our Peloton now, when you sign in, it literally says like, please make sure that all children and animals stay away from the Peloton and all that stuff. And I'm like, noted.
What? Okay.
All right, let's see their income statement. 4 quarter. Oh my gosh, look at that revenue skyrocket.
Mm-hmm.
Their profit. Yeah. Okay. I mean, there's cash flow.
You're just going to mutter to yourself on the show?
I mean, we don't have 3 years of data. We don't have a lot of stuff.
Okay,
here.
yeah. Cut to the 8 pillars and give me your thoughts on Peloton.
175. Let's look. Let's do stock analyzer tool for Peloton.
Mo, are people trading Peloton because they had? So, folks, they got in some trouble a few months ago with where their machines were eating kids and dogs.
Right in there.
And now we're back. So, what's going on here?
Yeah. So they've had a pretty good recovery. Now, my point that I made on the morning show today was there's this resistance line right here, and they are at it. And coupled with that, they are in that overbought region. So I think that this thing is for sure going to turn back down in some way, maybe pull back here to the $100 or so, and then we'll be able to catch a real run up when they actually start doing good things financially, news starts coming in. Because, I still haven't heard good news about Peloton coming out and saying, like,
No.
Besides, I don't even think they publicized they made that. Now they make you type in a passcode on your to unlock the machine, but they haven't said anything yet. So I think when that comes out, everybody's going to freak. Stock's going to go soaring. So this will pull back a little bit, I think.
Did we miss the boat when it came back through the sweet spot here? Are we sad? Or too volatile?
I don't think so. I thought it was too volatile.
Okay.
I think it was much better to do on a swing trading perspective or a day trading perspective, just because of what was happening. I don't think this is something that I would want to get into.
Speaking of those swing trades, Mo and I did another video talking about how to differentiate day trades, swing trades, and long-term trades, which is coming out very soon, Timothy, in the next couple of days. So,
and you see all this mess right here? That was like, that's a lot of lines. And a big reason that I didn't get into it is because you dropped way down here. You were below the 25-day, the 200-day, the 50-day, the 100. You were under every major moving average. So now that they've kind of surpassed those moving averages, maybe there's some room for them to run.
Nick is saying we should turn the cake into an NFT and then sell it. That's
good idea.
That's definitely a great idea, Nick. And Paul, let's get after the stock analyzer. Do you want to do this?
Yeah, Peloton.
The stock analyzer tool for Peloton. If you are a patron and you have that wonderful software, the Everything Money software, the new stock analyzer tool is live and for you 1 month early. Paul over-delivering for you. It's up and live. Give it a try. And
Okay.
Paul, let's look at it.
So right now they did $3.5 billion in revenue last year, right? So one of the things I'll say is let's remember what these numbers will actually mean. As an example, if we put a low assumption of 10% revenue growth, 15 and 20, at 20% revenue growth, that means in 7 years, Peloton will do $12.5 billion in revenue. So one of the things I would ask you is that possible? I honestly have no idea. I have no clue that's possible or not. Does it seem reasonable? Okay, who's out there doing subscriptions? I pay $40 a month for it. So 12.5 billion, let's say 80% of it's at some point is going to be revenue, recurring revenue. That's $10 billion conservatively. Divided by 12 is 833 million a year. Divided by 40 is 20 million users worldwide. Does that seem reasonable? It doesn't seem terribly, it's not like I sat there and said, no chance. I was like, okay, 20 million users. Find out how many users they have now and then extrapolate that. It's like, this is part of the investing thing, is just think logically about this. So I'm okay. Oh, wrong screen. I'm okay with this 10, 15, 20. High side. Share change. Okay, let's go. Let's say they want to finance this growth. I don't think that's, other way around. Profit margin. I think their profit margin would be way higher than 6% as they get the subscriptions going. So again, because they don't have history, I don't know. Now, one of the things to do is, you know what we should do? What's their gross margin? Am I on the show by myself? Is anybody here?
I'm here.
There's a guy, Matthew Jones. Mo, do you know this guy?
Yeah, this is who Matt. So chess coach Matt Jensen and I were talking. We started like a little chat with him.
This guy's
Matthew
the funniest.
Jones is literally the funniest
Paul,
person.
You're trying to talk, and he's saying, "Boy, your WW2, your World War II. They're bombing, they're tanking, and then you go into Norm Macdonald right after Normandy, and then he's just all over the place. Don't call Peloton a dog stock too soon, Paul. It's just."
And then he just said, Peloton only has 2 years of data. It's just a baby stock wins.
I just said he's got to.
Funny.
I said he's got to connect with me on Discord. We need him to write the Everything Money comedy merch.
You're right.
Funny.
That'd be great.
All right, keep going, Paul. Stock analyzer.
So profit margin, I actually put it 10, 13, and 16%, because I don't think it's unreasonable with a 40% gross margin, especially when a lot of it's going to be software subscription based, to have that revenue. If you look at Microsoft, for example, Microsoft's gross margin, profit margin skyrocketed once they got AWS and subscription for Office 365. That really increases. The subscription model is really becoming the way of life. Like, hey, instead of paying Everything Money $5,000 every 5 years, pay us $25 a month and you'll have our software and all updates, blah, 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 blah. That's the entire model going. So free cash flow as a percentage of revenue, I really don't have a clue. Let's do the exact same numbers. PE, I don't like 25, but it is what it is. Same thing here. Desired annual return. I keep a lot of these very simple. So right now the stock's at $127 a share. Even on my rosy assumptions of 20% revenue growth, which is a big revenue growth number, guys. For 7 full years, the highest price I get is $100 a share. Lowest price is 15. So I just think the stock is just overpriced. Not as much as I would have thought before. Is it probably worth somewhere in the 40 to 60 range maybe? Yeah, probably. I don't know. I just look at it saying, is this likely? At 15% growth a year, what does that take us to? 15% growth a year, 1.15 to the 7th times 3.5 takes us to $9.3 billion, which means instead of 20 million, 15 or 16 million users using Peloton. I don't know how many users they currently have. Can somebody find out how many users they currently have?
Sure.
Because this is all part of the analysis of businesses. Where are they now? What is the market potential? There are 7.5 billion people, all doing these things, and I do think Peloton is the market leader right now of equipment.
4.4 as of December 31st,
4.4 million?
As of the last day of the year, 2020.
Oh, wow. So I think 15 to 20 million is not unreasonable as they grow. I think that's pretty awesome.
Paul, if you step to your left there, and Tim goes to the wide angle, we are having the chance for the no thighs, no piece. We need to see those beautiful shorts. So just step to your right. There you go, Paul. Now,
what am I doing? My right's that way.
Oh, sorry. I meant to your left there. Tim, you see that wide angle. You can see his beautiful, with these frothy, wow, look at that deep squat and these white, pale white thighs that are really milky and like buttermilk, Paul. And
I've only used the pool once so far this year, and it was actually at night when it was kind of drizzling.
Drizzle. All right, here we go. Okay. The drawing has taken place. Sam, you're a little late. I love you. That is our take on Peloton.
Yeah.
Should we
That's
wrap?
why I like by the way, that's why I like the stock analyzer tool. Because even for me, I would have never guessed even this would be, I thought Peloton was like a $20 stock.
What is it?
I mean, we're in the 15, it's a very wide range, but I think probably in the $40, $50, $60 range is probably pretty reasonable.
All right.
Because 15%, to get to $10 billion in revenue, because people who bought last year, yeah, they paid a lot for it. The question is how much of those sales were initial buys for their equipment, because we spent $4,000 and then spent $40 a month. So these are the things to look at. Anyways, that's it.
All right. For those of you who gave like partial donations, I'm sorry we couldn't get to you. We do require a $50 donation moving forward, guys. So if there's a couple in here, Robert, I'll get you next time for sure. Contact me on Discord if you need something. Yep, that's our show today, guys. We're going to go reminisce on this cake. We're going to go give Phil Sue, the Tesla winner. We're going to give him another call and just congratulate him. The drawing is over for 50K, but we have another one at 100,000, which will be happening right around the Thanksgiving, unless Paul screws this all up for us by insulting any of all people out there. Nuns and priests, rabbis, any of you. You're in his crosshairs, I assure you. Politicians, you're in the crosshairs of Paul. We all are,
politicians
really.
deserve it.
Okay, yeah, we all are in the crosshairs.
I was going to make another joke, but I can't say it, or else I'll probably be canceled.
Mo, thank you for your trading. Good luck in Turks and Caicos.
Thank you. I'm gonna be
Your
there
new
too.
property, Paul, as well. Good luck in Turks and Caicos. I will be taking over the live show on Thursday, 9 a.m. to buy all those Little Book stocks, and I will give away the signed copy of the Little Book to one of our patrons. And there's a thread in Patreon if you want to go sign up. And like 340 people have signed up, so I appreciate you guys. So that's it, guys. Thanks so much. Happy birthday to Paul. We'll see you next Tuesday on the big show. And have a great week, everybody. Thanks.
Take